Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So, feel welcome. Sorry for that. So, I would like to begin with our mic test. So, if you can hear me clearly, kindly type hi on the live chat, and these will confirm that everything is working just fine. So, hi Chuma, hi Trapsked, welcome to the session. Hi Charles. So today, being Tuesday, and we are also experiencing the last day of the month, there is a lot happening in the markets. We know yesterday was largely a quiet day in the economic calendar, but today the news will begin picking up, and we have quite a lot that we're expecting today. So a quick perusal to the economic calendar, you can see what has been happening. So the speech by BOJ Governor Ueda was expected to happen on Tuesday. In fact, they shifted this to Monday. That was yesterday, but nothing much happened. We're expecting policy to remain relatively the same. So as for this morning, we had preliminary industrial production month over month, and this is from Japan, which came in slower than expected at negative 4.6%. But then the retail sales represented well with 6.3% growth over the last 1 month, and this is compared with the other year. So ANZ business confidence came in slower than expected. Then we had the Australian current account difference between exports and imports, a big improvement to 14.1 billion. This is impressive, basically indicating that Australia is a net exporter and it's making a kill out of it. Private sector credit improved to 0.4%, retail sales 1.9%, better than expected. And then we looked at housing starts for Japan, which came in better than expected at 6.6%, whereas CPI, that is core CPI, remained the same at 3.1%. So this was a series of positive economic data coming from both Australia and Japan, but we didn't have much happening to their currencies. So now, going forward, we have just seen the French consumer spending improve to 1.5%, German import prices down 1.2%, but still better than expected. And then CPI making a big jump of 0.9% in France compared to the previous jump of 0.4%. So these are key data points that a lot of our investors are following as a leading indicator for European inflation. So if there's a jump in France, a jump in Germany, then you expect also to be a jump in the entire Eurozone. So now we focus on the GDP from Switzerland. This will be released, I think it's already in. Just refresh here. It was released 5 minutes ago. So this dropped to 0.0%, and this is bad. So whenever you have GDP dropping to 0.0%, another reading of 0.0% or below would basically be a confirmation that the economy has gone into a recession. So investors will be following closely and perhaps even trying to estimate whether there is an actual recession happening in Switzerland. So KOF economic barometer basically rising all the way to 100.0. So level of composite index based on 219 economic indicators. So this is an improvement for Switzerland, but when you look at the GDP, not very good. So going forward, we have also seen a flash CPI. This is an estimate of European inflation. This came in at 6.1% compared to the previous reading of 5.9, meaning that inflation is spiking. So there will be a lot of speeches from Monetary Policy Committee members from the UK. This will be happening 1:15, 3:15, and 3:30. Then we will be seeing the Canadian GDP later in the day at 4:30 p.m. So perhaps the most important data point will be coming from Canada. That is regarding their GDP. And also we might be interested with the CB consumer confidence in the US, and this will be happening at 6 p.m. as well as the Richmond Manufacturing Index. So this week we have 5 speeches from our Fed members. So we'll be having a speech from FOMC member Goolsbee, and then we'll be having even more speeches later in the week. So as for tomorrow morning, early in the morning before we run the session again at 11 a.m., we'll have already experienced the CPI for Australia, GDP data for Australia, as well as Japanese final manufacturing PMI, and Chinese manufacturing PMI, as well as the services PMI. So this could bring out of volatility in the market tomorrow very early in the morning. So you might be interested in looking up the data and getting prepared to trade the volatility. So that being mentioned, let's look at the charts quickly. So the most interesting chart for the day is USD JPY. You can see there's already a big jump breaking out of this flag. So this is the second flag that we are seeing in a short period. So in the last one, it's a market that had been trading sideways for a couple of days, and then it made a big break on Friday. And then this week, you can see what followed. The flag traded here on Monday, and then today being Tuesday, there's a quick break indicating the resilience and strength of the dollar. So we might be looking to trade this continuation going forward. So there is a good chance that this chart will keep pushing higher as long as investors continue pricing in the divergence between the Bank of Japan policy and the Federal Reserve Bank of the US. So on one side, one central bank being very aggressive with rate hikes, the other one maintaining negative interest rates, and at the same time stimulating its economy through quantitative easing. So in this case, we expect some further upside to be happening in USD JPY. It might make a lot of sense to trade these. So yesterday, looking at the S&P 500, in the morning, we were looking at these. So during the session yesterday, we were looking at the S&P 500 making a strong recovery and going up. So I mentioned that we are not interested with the upward momentum. We are looking for the weakness. So the weakness happened here. And since then, you can see that the index reversed direction. And so far, it has been moving downwards. So I expect this kind of movement to continue for the rest of the day. So short selling positions are in order. Same case for the Dow Jones as well as the NASDAQ 100. So as for UK oil, I remember analyzing these. We mentioned that key price level would be 83.013. So after the market got to this area, there was a strong rejection, and we spent the rest of the day enjoying much lower prices for oil. So today, we are seeing the market make a very strong recovery and push even higher. And the same level that we were observing yesterday, 83.013, might also be very important to observe since it may also act as the resistance today. So the idea is to look for a binary outcome from here once the market gets to 83.013. Potentially breaking, we go up. If there's a resistance, then we go further back downwards. So as for the dollar index, spent the better of the day weakening and created the necessary or potential opportunities in other pairs. But from this morning, we are seeing the dollar index recover, and this is an indication of a strong dollar. So as for the UK 100, it's the same story. So yesterday, early in the morning, we were seeing the market moving upwards like this. But then once it got to resistance, there was a strong rejection. And now we are seeing the price move further back downwards. So the idea is that this particular trend continues for the rest of the day. So there is a good chance we might be seeing some further downside momentum happening from the FTSE 100 index. So besides these, anything else we mentioned or we have been following is Bitcoin. So forgive my chart, there's a lot of analysis paralysis. So this is what we had. 2 weeks ago, a very strong momentum upwards. Then last week, there was out of a pullback, market basically raising gains. And now this week, you can see we started with a jump up. BTC attempted to go up higher, but we are seeing some consistent trend line forming here, acting as resistance. And anytime the market gets to this point, finds a resistance and eventually moves back downwards. So it happened here, and now around this area here. So there is a good chance that as we continue seeing a stronger dollar for the day, we will be seeing some further downward momentum in Bitcoin prices. So a nice short-term intraday target would be the high that we saw, the low that we saw on Friday. So 22,840 might be an interesting target for Bitcoin traders. So any questions are very welcome. So I'll be checking to see if you have any questions. Oh, there's a very good question here. I would like to highlight these. Why do you scam people? There will always be spammers on the live comment section who will respond with questions trying to make a good thing look bad. So we tend to ignore them. So hi guys, thank you for the responses. Uh, what are you talking about? O block doesn't make sense to me. I don't know what you mean by O block. So how is trading on the last week of the month? Isn't it very risky and volatile? It's a good question. So in our very last day of the month, we normally experience heightened volatility in the markets. It's quite an observation. So this basically represents a very good opportunity to take advantage of the volatility. So as we all know, in trading, we make money when there is volatility. If prices are not moving, then there is no opportunity to make money. So on one side, there's a heightened volatility, which means there's more opportunities. But on the other side, it's also a big momentum in the markets, which also increases the risk. So it's a high risk, high opportunity environment. So you might want to consider both sides. So question about gold, I'll be checking on that, and pound USD. Also, there's a question about the Japanese market expectation in terms of inflation. So Japan is experienced heightened inflation, and this is being driven by the services sector. We have seen that manufacturing is slowing down, but service is very hot right now. So what we expect is that inflation will continue running higher as a result of a couple of factors. So the number one factor being the amount of money that the Bank of Japan is pumping into the economy through the QE program. The other factor is the yield curve control program that the Bank of Japan is running, which has maintained a limit of 0.5% on either side for 10-year bonds. So what this means is that investors don't find those bonds lucrative because the yields are capped at 0.5%. Whenever they move higher, the government intervenes. So as a result of that, instead of investing in equities, they're investing in the economy, and this is leading to higher inflation. And on top of that, we are seeing wage growth picking up. So with wage growth picking up, then as a result, we are expecting inflation to get sticky in Japan. So the Bank of Japan has been fighting deflation for quite a period of time. So now that they have fought for like 20 years and they have just seen the first fruit of having positive inflation, they might want to keep doing that for a while until they are sure that they have achieved their goal. So as a result of these, we expect the Japanese yen to continue losing. And as a Forex trader, you are always looking for a strong currency to pair against a weak currency. And so far, out of investors have identified Japanese yen as the weak currency. So most of the trades will be pairing against the JPY to trade strength against weakness. So as for the questions about pound USD and gold, I'll be checking on that right away. So as for gold, we can already see it's following the momentum of the other indices. So it's being treated as a risk asset. And as you can see, there's a strong bearish momentum, as we mentioned yesterday. So yesterday, we saw gold prices making a recovery, but we mentioned that after breaking these support levels that were being tested for quite a period of time here, bouncing here and failing to bounce from these, then this break was very significant. So yesterday we were speculating that the price might go up, but eventually the bias is downwards. So today we are testing yet another major support that was formed yesterday. So there is a good chance that gold will break this support and continue pushing lower. So 1800 seems like a nice target. So as for pound USD, we are still within this sideways momentum. So just to give you a brief idea, this is the 4-hour chart. So for 1, 2, 3 weeks, pound USD has been moving sideways. So while the support seems to be getting lower, the resistance is also getting lower. So if you are to squeeze in some form of trend line here, then you would see that yesterday's rally has already met resistance, and there's a good chance we'll be seeing some further downside. So from here, you can already see after the sharp rise yesterday, getting to this resistance. There's a strong entry by sellers, which is evident from this sequence of candlesticks. So perhaps we'll be seeing some further downside happening today while the market trades within this particular market pattern. So the last question was on Euro USD. I think it's pretty the same. There's a lot of variations in these markets. So you can see the highs here being respected pretty well. So a very strong rally yesterday got to resistance, and then immediately after that, a very strong drop. So whereas we are seeing some price action in the last 2 hours indicating some pullback. So my idea is to observe the price level around this area. And if there's a strong entry by sellers, then you trade the same idea of going for some lower prices, taking advantage of the strength of the dollar. So thank you very much, guys. Thank you for your time. I really appreciate you being here and you engaging on the comment section. And I hope to see you on the next session.